Today, I'm delighted to be joined once again by Matt Timmins, CEO for Fintel. Fintel recently come out with their first half trading update, and I'm here to talk to Matt about that today. Matt, welcome.
Thank you. Delighted to be here again.
Great stuff. And well, for those who may have missed the results, can you recap quickly?
Yeah, absolutely. So it's our half year results, and our revenue is up almost 19%, which is great. It's good performance in the period. I think more importantly than that is the quality of that revenue. So, any business can have a good 6 months and revenue be higher than it was in the previous six. But importantly is the quality of that revenue. And our SaaS and subscription revenue is up 21%. So that's, revenue enhancement from high quality recurring revenue streams such as technology and membership subscriptions. So really pleased with that, continuing the strong performance that we ended last year with. Adjusted EBITDA is up 17%. So again, that we see the increase in revenue flowing through to earnings, and we closed the period with 8.4 million in cash and a net debt of 32 million following a spree of acquisitions over the last sort of 18 months. So yeah, really good performance in the first half of the year.
Well, congratulations. They're very, very impressive results. Can you talk us through what's been behind that growth, Matt?
Yeah, so we've made some good acquisitions. One of the businesses in particular, Vouch4, is growing incredibly well. We also invested heavily into a product called Matrix 360 for the insurance market, and that's also growing well. So a combination of investing into existing products and the acquisition of Vouch4 have predominantly driven a lot of growth in that period.
Okay. You also announced that you're refinancing the business. How does that fit in with your plans?
Yeah, so we've operated with an RCF for a long period of time with three banks supporting us. What we've done is we've added a fourth bank into that mix, and we've taken the RCF facility from an 80 million facility to a 120 million facility. And importantly, at the same time, we've also negotiated a discount in the cost of that facility as well. So extra firepower and reduced costs. So yeah, a double win on that front.
Okay. Now, I know we've touched on M&A in the past. Has that strategy changed at all, or can you just talk us through what your strategy is?
Yeah, sure. I mean, we operate in the world of UK retail financial services, primarily dealing with intermediated businesses. And those businesses use, on average, 8 or 9 pieces of technology to do their job for their client. So it's a very fragmented market and it's highly inefficient. And so our plan for a long period of time has been to try and consolidate software in the market, to try and buy the market leading pieces of software in each one of those 9 areas, which we've done now. We've made acquisitions across the whole spectrum of advisor technology, and now we're able to provide software and data services to the market across the entire range. So that's been the sort of driving force behind the acquisitions, if you like, trying to make sure that we consolidate a fragmented technology market. Where we're turning our attention to now is to take that software and build two-way API integrations between each one of the modules and a common identity layer and data layer to ensure that we can essentially offer that software to large businesses as a single solution to enable them to do everything under one umbrella.
Right. Well, I mean, it's almost like you can't have a conversation these days without talking about AI. It's almost on a daily
Yeah.
basis to talk about. How do you see that AI affecting retail financial services?
Yeah, I mean, it's obviously relatively new in the world of retail financial services. And I think that the position we're in at the moment is not particularly helpful for advisors, and I don't believe will be the long-term solution. So there are a number of AI players in the market who are offering a solution as another piece of technology layered onto the top of an already fragmented market, where advisors are expected to pay several £100 a month for a single sort of piece of software, if you like. Where I think AI has got a role to play in the market and where we are investing our time, our energy, and our money is to make sure that we integrate AI agents into the existing technology stack. So I think AI is going to be incredibly beneficial and important to this market, just perhaps not in the way that we've started at the moment. So I think when the big players in the CRM space and the advice technology space start to integrate AI into their solutions rather than seeing it as a layer across the top, that's when I think we'll bring real benefit to the market.
Okay, that's interesting. So financial resilience and capital allocation, what's be your approach here?
Yeah, so I think I mean you know the business relatively well. The cash profile of this business is incredible. And what we look to do is to allocate that cash effectively over the period. So there's some debt to pay down, which is really important for us. Also, acquisitions where the opportunity allows itself. So there isn't a particular business at the moment or space that we are actively pursuing. However, we have to keep in mind that this is still a very fragmented market. And if the opportunity for a significant acquisition opportunity comes up, then we will play in that space as well. So we've got the RCF to enable us to do that. But at this moment in time, we're concentrating on debt pay down and integrating the acquisitions that we've already made.
So then looking ahead, what should investors expect in the second half of 2025?
More of the same, I think. So we've started the year incredibly well. We're trading in line with expectations, and I expect us to continue to do so. We've got some work to do internally around integrating the acquisitions that we've made and developing the single platform solution for technology. And I think, so far performance is going well. Yeah, we're happy.
Great. So finally, what message would you like to share with your stakeholders today?
I think the important message is one that we've outlined a number of times on your show, which is Fintel is a business investing for the long term. We are here to grow revenues and grow earnings on a stable and sustainable basis for years to come. We've invested into new technology in the market. We've reinvested into our own products. And everything that we do in terms of the investment, the acquisitions that we make, is all around driving long-term sustainable revenues from SaaS and subscriptions in the main. And that's our business. We know the market well. We're a 20-year-old business that has got a great track record and has got a really solid customer base, and one which we believe will be here for another 20 years and thereafter.
Great stuff. Well, I think you've got your interim results now. Is it mid-September?
Yes, out at the end, towards the end of September. Yeah.
Great stuff. Well, I look forward to catching up with you then.
Brilliant. Thanks very much.
Cheers, Matt. Thank you.
Thank you.